Welcome everyone to the 9th StakeHound Ask Me Anything session. This is Castellana, CEO of StakeHound, and I'll be here every week with a conversation with an industry leader to discuss the state of the industry, staking, and DeFi. StakeHound brings staking and DeFi together so that you no longer have to choose between earning from staking while securing your beloved networks or earning from participating in the booming DeFi applications. Thanks to StakeHound, you're going to be able to trade one-to-one representations of any staked proof-of-stake token on Uniswap or borrow against them on tools like Aave or Cream. Well, thank you all for being here today. We have Federico Nitidi with us today. Just like he's the creator of Uniswaproi. It's a tool that I'm like using quite a lot, actually. I think it's an amazing tool, and I just really wanted you to come to the show and just like, show kind of your experiences a little bit and like explain like what the plans are for the project, how you see the DeFi ecosystem. Well, thank you very much for being here today.
Yeah, thanks for having me, Albert, and excited to take part.
Great. So let's start by the basics, I guess, right? Could you tell us a bit about yourself, where you come from, how you got into crypto?
Sure. So thanks for having me. Excited to be on. In terms of kind of myself, I'm an engineer by training. I've been working kind of between the more technical side and the more the finance. I started my working career at the Boston Consulting Group, so more in the management consulting side of things, primarily working in Europe. And then in 2017, so kind of 3 years ago, moved out of BCG and started my kind of software company. The company per se is a software as a service company that it's outside per se of crypto, was more in the space of sales and B2B distribution, automation for those spaces. Then we sold the company just about a year ago in October 2019. Right. And since then, I've been doing a bunch of looking and working a bunch of projects, and also kind of intensify a little bit like my presence in crypto. I've been a crypto person in a sense, or interested in crypto since about 2015. So it's kind of been through the bubble as many of probably you yourself and many people, the more recent bubble. And then about a year ago, when we were really seriously considering selling the company, I was around by the same time, beginning of last year, I got introduced to the notion of DeFi by a friend who again like is in Ethereum and later on started a little fund, and that back then, I mean, DeFi wasn't new as a concept per se, but definitely nothing like what it is today. Uniswap just launched. It was maybe 10 million liquidity, and in particular, I remember when I got introduced to Uniswap, of the different kind of DeFi projects that were there back then, I really got fascinated. It really looked to me as the first implementation that I saw of decentralized, autonomous protocol organization, really autonomous. So for me, was kind of a lightning bulb, and so I decided to really study the protocol. I created a few models. Then those models became the first version of the site that you mentioned, Uniswaproi. And so after this phase, then DeFi grew, especially in the last quarter or a couple of quarters, like exponentially, really well. And here we are, doing DeFi a lot and trying to keep up with what's happening.
Yeah, which is quite a lot, right? Like, I mean, well, first, like, congratulations on selling the company, and I think it couldn't be better timing, I guess, right? Like 2018, like the worst moment of the crypto crash, and then
Yeah, absolutely, and also like just before COVID, so it was a good timing, and we didn't know back then, but it turned out to be great timing, and really like being able to work on crypto right now, I think is a pretty unique timing, unique opportunity.
Absolutely.
I'm sure you share this.
Totally. Everything is being built right now, right? And that's quite special. Like we don't realize what the magnitude of what we're building, but like, you know, what you see when I'm looking at these kind of projects, like, you know, like Yam and Tendies and all these different kind of food coins and stuff like that, right? All of that is just like really good experimentation that then in the future will be very powerful for different, you know, real world applications, right? When you have, you know, central bank digital currencies that are being traded and that people can provide liquidity to them, and then people are incentivized to do against something for whatever reason. Like there's just so many things that we're exploring right now as like literally food coins, right? That in the future, like I don't think we can imagine kind of the ramifications that all of this will have, you know, in like, you know, in the years to come, right? Like I remember when I started in crypto, it was like, for me, like tokens were not money. I wasn't assuming, like I wasn't linking them to money. It was just, you know, these like rubber ducks or something, you know, like actual tokens that, you know, for a game, right? And it's like playing this game. I like this blockchain. I like this blockchain. Every single blockchain. I have a friend, like he was saying, like every blockchain is like a different superpower, right? Like you buy some Zcoin, you're essentially buying some privacy superpower, right?
Absolutely.
You buy, you know, like every one of them, like completely, yeah. So I feel like that's super interesting.
Yeah.
Cool. Yeah, I mean, absolutely. So I remember learning about, like, first, like seeing and using Uniswaproi. I think it was a friend of mine told me that it was kind of available for Ampleforth, right? Kind of this rebasing coin that like a few months ago that completely exploded, right?
Yeah.
And it's actually very interesting as well, because it's kind of the way that we distribute the rewards to the people that are holding the stake tokens, right? If you're holding, say, staked ETH, then you will be distributed rewards by holding, right? So which is through a rebase, right? Can you tell us a bit, like I mean, I guess like from when you started, right? Like I believe that was as well like the tipping point where things started to blow up with Ampleforth and the whole
exactly.
DeFi.
Yeah, so well, I mean, to your point that you were saying that we're building, in a sense, pieces of something bigger. I really agree with that. And for example, I mean, all this concept that today, you know, are for sure are very experimental, maybe low liquidity. For sure, even Amplifier was like that, and you saw it going through, you know, pretty much a bubble. But this is powerful stuff. We don't know exactly how it's gonna, you know, what's gonna stay, how it's gonna be recombinated in a sense, and into what will it morph into. But it's all very powerful blocks. And within DeFi there are, you know, especially some blocks that are very unique. Think about like flash loans. Think about staking. I mean, staking is a very unique property of DeFi you don't find anywhere else. So yeah, I mean, Amplifier, which as you said, like shares the same mechanics as your token in terms of you know, in terms of the rebase mechanism, but also like the, you know, the gazer, and so the even staking on top of that.
Exactly.
Yeah, it became really crazy. It was about July, I guess, and I mean, it went through different phases. People it's very hard concept to get, because the price and the capitalization are connected, but through the mechanism of rebase. You really need to look at the market cap if you want to understand. And so people were kind of fascinated. It got to a point where yeah, like I think that was ignited maybe that bubble of like explosion of DeFi of August and then September. And then and it's surprising to see that per se. I mean, Amplifier, you know, went through different phases. At first they say, oh, this is genius, this is totally genius, and people were making a lot of money. And then it was, oh, this is totally nonsense. You know, when it goes negative rebase, it will never go up. Now, if you look at now, like past the nonsense, still is, you know, the peg is kind of 1 or maybe 1.1. And so we'll see what happens to that model, whether it works or not. Definitely these things, they need time to play out. And
absolutely, it's really early. You can't look just like the first moments of, you know, like obviously, you know, babies are born there. Some of them are uglier than others, and it's just you just need to give them some time to be older and like to really understand how, you know, to
And by the way, I think like the other point you mentioned in terms of different blockchains, sharing or being characterized by being having superpowers, let's say. And that's kind of a viewpoint that I really share as well. That's the way I look, and I think it still, this space looks very esoteric to the majority of people. I mean, I'm thinking, for example, to the people that I've been working with in BCG. So you know, very smart people, but maybe not the best early adopters of a new technology or a new space. I'm thinking, you know, sometimes I think about them, and I, you know, if they were to see like what's going on in DeFi, the wildness and all the new concepts, or even just the intricacy of all these blockchains, I'm sure they will. I mean, the majority won't probably understand, or won't probably take it seriously. But in reality, you know, the way you justify having multiple blockchains, why not one, right? Why not?
Right.
You know, why two? Why Bitcoin? Why Ethereum? Why many others? Is really because each one has a specific property, being that privacy, being that speed or scale, or you know, different other properties. And in a similar way, I mean, like a project like yours, I think it really you know, bring these blockchains to fruition, and basically, yeah, you build bridges in a sense, right? So from one, maybe the one with the biggest network effect or business adoption, which right now for DeFi is definitely Ethereum, you can, you know, branch out and allow users to permeate and to transfer into others. And so I think it's really like a good infrastructure piece of the system.
Yeah, absolutely. I mean, I always kind of explain like the way I see it as like, you know, these are different islands, right? Each one of them with their societies, with their economies, you know, with the things that they can do. And like, we're just building a bridge across all of them, right? And like, well, I was surprised early on that there were not more bridges. And it's interesting. Okay, like if there's no more bridges, I'm gonna start building with these bridges, you know, like that's what we're doing, right? Like I want to be able to trade you know, like all these different assets in different places. I think that's something that's absolutely necessary. Like going back a little bit into DeFi, I'm curious to see like what are the things that you find more interesting in DeFi?
I mean, it's hard to find something that is not interesting, especially right now. It's crazy. Maybe I mean, there are many properties that I think the foundational properties of DeFi, you know, the fact that it's permissionless, that it's censorship resistant, like that it's built on something that is really global per se is revolutionary. Like even just that little bit. In terms of specific properties of DeFi, things that happen in DeFi and don't happen anywhere else. I think, for example, the notion of flash loans is very interesting. That is something that won't happen or is not possible to find anywhere else, right?
Totally.
Like a loan that doesn't happen and long is settled. So that I find it like a very interesting property. What's going on with staking, I find it also very interesting. I did just before the call just to bring myself up to speed a little bit of research in terms of staking, and obviously staking is a big part. I mean, for those who may not be familiar with staking, the idea is you deposit an asset of yours and you deposit in a contract, and then for different reasons, right? But the idea is always you deposit there and you earn some sort of reward, and you have the staking in terms of the blockchain, which is I guess what you guys are you know, tackling in terms of the other blockchains, and Ethereum is gonna get there too. But also you have staking inside of DeFi, and that has been like a year ago it was zero staking, and now there's $3 billion staked, with Uniswap being like the lion's share, and Harvest and SushiSwap and all the Pico, all the others. So think about, you know, the mechanism of incentive that creates, and all the kind of secondary effects of you know, creating a liquid market and being able to essentially create new pools which effectively are in the market. So those two concepts, flash loans and staking, I think they are very unique, right, to DeFi. And there's a lot more that's going to be built there, I think.
Mm-hmm. Yeah, I mean, those are amazing building blocks, right? I'm actually curious on like the flash loans, right? So just for people who don't know, the concept is essentially, well, I mean, maybe you can, like, I have a friend that is actually quite verbose, that he doesn't see anything good in them. And like, to me, arbitrage is something that is important and good, although it takes from the markets essentially, right? But someone else profits from them. It is
Sure.
a necessary force in the market, right? So
Yeah.
like, what's your view on that? Why is flash loans a good thing?
Right. So I think first off, I mean, why arbitrage is a good thing. Arbitrage, I think, is a key aspect to maintain any market imbalance. If assuming the market was a completely unified thing and completely liquid, and by definition would be a perfect market, then there wouldn't be any need for arbitrage. Or maybe there could be still like a long-term arbitrage, like, you know, I buy gas in the summer, I sell it in the winter, like any commodity, right? So that's kind of a more long-term. But what we're seeing with DeFi is especially is like as a short-term arbitrage, and the reason why that is useful and you want that is because the market in reality is not a unique market. You have multiple exchanges, you have multiple, you know, makers and takers, and so what happened is the same price for an asset may be unbalanced, you know, between across all these markets, and so the arbitrage, like what they do, what they do is they capture an incentive, which is closing the trade, so buying cheap and selling at a higher price and making a margin. But in reality, they give back to the market by providing a stable, reliable price of the asset. So that's a very key point, I think, in the way, especially in a market which doesn't have a lot of liquidity, right? You know, as DeFi right now, it's $10 billion, but still it's pretty small, and also because it's fragmented across multiple tokens, multiple assets. So you see why you know the need for arbitrage there. And I think, by the way, like an interesting comment here is that when Uniswap came out, the entire idea of Uniswap was that, okay, we're going to have this decentralized exchange, but it's never going, I mean, they didn't say that, but I think the idea was it's never going to be that big that it's never going to overtake a centralized exchanges, right? So you're going to have the price that forms in Binance or Coinbase or, you know, other big exchanges, and then we'll need an arbitrage from the centralized to the decentralized to maintain the pricing balance. Now I think it's almost flipping, where, you know, Uniswap is becoming, Uniswap and maybe others, Curve for stable coins and Balancer, they're becoming the hub, right? So almost, you know, we may get us at a point where the arbitrage is the opposite, and, you know, the price is forming inside Uniswap, and then it get kind of propagated across the centralized. So so that's why you want arbitrage. And then the flash loan is just, I think it's preventing the party doing the arbitrage from the arbitrage risk, the counterparty risk, which is essentially, you know, I buy the asset cheap, but then when I want to sell it to the market, the price moved and something happened, I don't find buyers, and therefore I get stuck with the asset I bought. And the flash loan property basically allows you to close the trade and to take the loan and to essentially close the loop only if the transaction closes. Meaning, it's almost like you align every piece of the trade. So okay, you agree to give me at this price, to sell the asset to me at this price. I agree with the buyer to sell it at that price. Everybody, you know, everything is settled. Then okay, let's execute. Let's take a loan. And so, you know, being able to do this trade with a leverage which is much higher without the risk. I think this is phenomenal. Then obviously, I mean, it has pros and cons, and then with that weapon, in a sense, you can do, you know, there has been like hacks and you know, disruption of oracles that happened that way. But the concept is pretty revolutionary in my mind.
It is. It is essentially kind of perfect arbitrage, right? Like frictionless arbitrage. You can just get as much value as you want for close to no price, make the trade that you want, and then, like, you know, unravel the whole thing, right? I'm like.
By the way, don't forget that, like, maybe a critique to the arbitragers is oh, but by doing that, obviously, the arbitrager makes a profit, and therefore that profit is an externality for the market because it's subtracted to the market. But don't forget that in a perfect market where many parties are allowed to become arbitrageurs, then all profits are competed out, right? There's, yes, you make a profit on an arbitrage, but you have to do so much work to actually take that arbitrage on that the profit is very small. And so the more people you allow to partake the arbitrage game, right? Okay, there is an arbitrage, and to close you need $10 million. Other than for flash loans, only a very few people could have that liquidity to deploy. Versus if you increase the pool of people that are available and can do that, then the market becomes much more efficient.
Do you think that this is going to be saturating Ethereum even further? I mean,
you mean like for transactions? And
I mean, there's the thing, right? Like one flash, like essentially any arbitrage shifts the market, right? If any arbitrage shifts the market, because like you're selling to that something that you're arbitraging in anyway, right? From something as well, right? So you are in one position, you move to another position to do the arbitrage. It's still moving the initial position as well, right? Which means that other people can then come in and arbitrage that as well. And in a system with perfect arbitrage where anyone can very quickly just be, I mean, would it be possible then even when there's enough, like the transaction fees are low enough, it always keeps being saturated because of the perfect arbitrage?
I think like what you're saying is, okay, so if you could, assuming you could do an arbitrage on like very small increment of price, then there will be like a chain of arbitrage, and it's going to be almost like a recursive loop, and we'll go spiral out. Albert, I don't know if we I don't know if we lost Albert for a second, but the idea is maybe, I mean, for who is connected, I can explain you a little bit the so what Albert was talking about is this scenario. If you're able to do a flash loan, and therefore you're able to, or let's say a flash loan, but in general, if you're able to do an arbitrage. So the arbitrage happens when, for example, the price is misaligned into places. So you buy in the place where the price is quoted as low, and you sell it at a higher price. By doing that, you rebalance the prices. Now, what Albert was talking about is that in the event of being able to do an arbitrage with a very, when the delta price is very low, then potentially, there could be somebody that would follow that arbitrage with an arbitrage of the arbitrage, and so on and so forth, and will make sort of a chain of arbitrage and clog up essentially the entire network. I don't think that per se is possible because really because of the gas price, which by the way in that scenario will become even higher. But in general, the gas price provides a minimum delta price that for which you can, it's profitable to do any arbitrage. And so I don't think that sort of chain effect can really happen in a profitable way. So I don't think that is a real worry. But for sure, I think the idea of allowing flash loan to happen, it definitely created a lot of volume and a lot of congestion in a sense, not just because of the flash loan, but the entire growth of DeFi created a lot of congestion back in August, September, and you can probably remember the gas price going very, very high. We touched like 200 and 300 gigaway. But then after that peak, now I'm even surprised how low the gas price is going. I think from there, we touched like even 500 at some point. Now we're back to 30, and so yeah, I think it shows you, how, I mean, how important it is to get Ethereum to a place where it's scalable, because you know, in that kind of bubble, you know, the network really got congested and practically unusable, because when you have to pay, you know, 500 gigaway for the gas, it becomes like anti-economic. But I think we're going to get there with Ethereum 2.0 and all that is happening. I think we're going to get there. So yeah. So let me check. Let me check a second, like the state of the art with Albert, and we'll join you back.
Whoops. Yeah, a power surge or something just like completely knocked out the whole grid. I don't know, something weird happened there. Yes. Sorry about that. So yeah, like where were we, I guess?
Yeah, no, we were saying, so I went on, I just, in the case of somebody was watching the live, so I just explained, like you were saying, like the arbitrage of the arbitrage and clogging the network.
Yes.
I don't think that can really happen. The reason just being that since there is a gas price, there is a minimum delta for which the arbitrage can happen profitably, and so it's not, you know, that propagation can happen at you know, for too long, in a sense. So
yeah,
but yeah.
I'm just curious, like I just guess, like I just worry, I guess, about the, obviously there's a limited bandwidth for the network, right? And then what's going to happen, and like eventually there will be like very, very large bandwidths, right, in this, like maybe Ethereum 2.0, maybe Radix, maybe, we'll see, right? But like the more pairs, the more tokens, the more kind of AMMs, right? All of this becomes way more complicated, and I don't have an idea of what can eventually happen, like how much of a percentage of the whole bandwidth can be taken down by something like this, right?
Right. Yeah, ultimately it's really the demand of the network, right? Like if there is adoption, which is, you know, what everybody is hoping for, then I think more people will look at different AMMs and so I think at the end of the day, I mean, it's all the scalability has a cost, and you know, in the event, like for example in October, I was, you know, I remember the price of gas went to 300 and 500 like crazy, and now I'm even surprised how rapidly it went down. So it definitely feels very cheap now compared to 2 months ago. And at that point, really, like only the people were transacting. I mean, a lot of people in retail were definitely cut out, and so it's all kind of an equilibrium, I guess.
Absolutely. Totally. Like, do you have any, like, we're now actually working towards like issuing a staked ETH token, right? Do you have any thoughts on the Ethereum 2.0, like what's happening there? Like, I don't know if you've been looking into that.
Yeah, no, I've been looking. To be honest, I haven't been following like the technicalities too deeply, so I didn't study like really the depth of you know, how the contracts are structured and so on and so forth. But in general, I think it's very positive that Ethereum is looking to this transition. The reason being, one is definitely the scalability. So with proof of stake, sharding, that's really, you know, if we are looking to onboard, think about this, like MetaMask users, and that was maybe few months ago, was they like a year ago there were 200,000 monthly users. Then maybe a month ago it was 1 million monthly users. So let's say 1 million people use monthly the Ethereum, but 1 million over 7 billion is nothing. So if we imagine that, okay, so from 1 million, maybe the next year, let's assume 10 million, which is still nothing, right? Still zero pretty much, but maybe 10 million, 50 million at some point, then you really need to, you know, almost by the time they get in, we need to have something better. And so that, and the other thing is obviously also the energy thing, which I think at least, you know, moving in that direction, you know, seems to be a good makes sense.
Yeah, I completely agree. So I mean, I'm conscious of your time. I think that you said you had to run, but is there anything that you would like to kind of share with the community? Like, you know, like is there anything that you'd like to highlight?
Well, like in terms of in terms of DeFi or in terms of
yeah, I mean, I wonder actually, like if you want to share some plans on Uniswaproi, like what,
sure.
like why would people be using it? Like, invite them to use it, I think.
Yeah, sure. So basically, I mean, for those who never are not familiar with the site, Uniswaproi is a platform that allows you to do two things. One, I mean, within the galaxy of Uniswap, which is a large decentralized exchange where also StakeHound is traded. So in Uniswap, you can be either just a user where you swap Ethereum for a StakeHound or vice versa, or for a token, or you can be an investor where you provide the liquidity. And so if you are an investor, Uniswaproi allows you to do essentially two things. The first thing is evaluate which which pools in which asset to invest, which are giving the best yield in terms of fees and the best return. And once you identify which pools and you invested, then really track your investment and see how it's doing. If you want to optimize it, want to change the allocation, basically decision-making tool for your Uniswap. And so in terms of in terms of plans, the idea is that Uniswaproi is regarded as one of the primary tools that LPs use to track the investments. I think it was very good to focus narrowly on Uniswap. And back then, a year ago, it was, as I mentioned, maybe $10-15 million. Now it grew to 3 billion. So it's incredible. I never expected something like that, to be honest. So it grew beyond the expectations. But then also other AMMs came about, and I think similarly to what we said about blockchains, I think each AMM has its own special power. So I think Uniswap is very easy, it's very simple in terms of for the user, for the LP, is very liquid, it has a good price, you can, many assets. So that's kind of the general purpose, I think, exchange. And then you have specialized like Curve on stable coins, which I think is also very good. You have Balancer, which is more flexible. So the idea is to move from being the Uniswap, the tool for the Uniswap LPs to be the tool for LPs, right? And so be still very narrow on liquidity provision, liquidity providers, and so not be horizontal, but be very vertical, but adding slices. And Curve is coming probably in the next month, and then after that Balancer, and we'll see what happens next. But that's kind of a bit the trajectory of the project and where it's going.
That's very, very, very interesting. I think like data is something that we have a lot, but no one is actually exploiting it well enough, And I feel like you've done an amazing job on like simplifying things. It's like, okay, I want to see how many fees I've got from this pool, and I can't see anywhere else except for Uniswaproi. Right, and like the way that you're showing the whole thing, like even like accounting for impermanent loss, allowing people to see whether they can, like, what would happen if the price did this or did that, right? All those different things. I think it's like very, very important pieces for this puzzle.
Thank you, and yeah, so it's for example, that business model of allowing people to invest, it's completely new, right? And I was talking to. By the way, I have the opportunity to connect with a lot of people, users that maybe invest, and then they get in touch with me. And among these users, maybe 2 weeks ago, there was a person from Goldman Sachs digital asset team, and so we had a call with this guy, and we were chatting about the idea whether AMMs will be a thing or it will be, order books and market makers. Because, for example, I mean, like a big part of what banks do in the traditional finance is making the markets, right? Being market makers for currencies and so on. And so I think the question was, okay, but will these, AMMs are really bad in finding the price? But I think the biggest idea is that maybe maybe they can be optimized further, And if you look at Curve, for example, it looks to me very optimized and already pretty good for stable coins. But the idea is that these protocols, these exchanges, they open up the opportunity to invest to so many more people, right? And is a new type of investment. Essentially, it's a completely passive investment for the most part, where you just provide your funds that are stale, otherwise it won't be used to an exchange, and to do that, the market where there is a demand for the exchange, they pay you fees and you get the fees, and so it's an entire new business model for investors. And I think that really the missing piece, one of the missing pieces, is really how do you know whether whether your ROI, you're making money, you're losing money, where are the trade-offs, what if scenarios, what happened. I think another interesting part which is also coming, they want to spend some time on integrating is hedging, and I think for example, what's going on with options and OPIN and hedging, I think is really interesting, and the conjunction between AMMs and being able to hedge your position with options is also something that I did a video like a few weeks ago on how to hedge with option the impermanent loss, and a lot of people got excited and wanted to do that. So I think that's another little piece that is going to come to really encourage people to provide this liquidity, because at the end of the day, if DeFi develops, then I think DEXs will become the the hub and the cornerstone of DeFi, and therefore the more liquidity, the more development for the system.
Yeah, absolutely. I couldn't agree more. Agree more. Well, it's been a wonderful conversation. Thank you, Federico, for being here with us today. I hope we can repeat this sometime. It's been very, very informative. I'm sorry for the glitch. I wasn't. Yeah, I was surprised. But yeah, this is essentially the end of this 9th StakeHound Ask Me Anything session. Thank you, Federico, for joining us today. And yeah, I would like to invite everyone to join our channels, join our YouTube channel as well, join our Telegram. I hope that Federico can stay around in the Telegram channel if anyone has any questions directly for him. And I strongly suggest you all to try his tool. I think that Uniswaproi.com is an amazing tool to be able to track what's happening with your provisions of liquidity, right? And in this case, they even kind of can track all the rewards that are being distributed to the stake tokens. You will be able to see them there, right? You will be able to see, oh, actually, I've got these many. I mean, they appear there as fees from the trading directly. I don't know if we can work on that someday, Federico. But actually, yeah, I think it's an amazing tool to understand what's actually happening when you're providing liquidity. So, strongly suggest you guys check it out.
Okay, fantastic. Thank you for having me. And yeah, we definitely can repeat this maybe once we have a little more data on the stake tokens, and
absolutely
maybe a hands-on session and for the users.
Let's do that. Cool. Have a good day and see you all soon. Bye-bye.
Bye. Have a good day.